The 4-step method to high-performance trading and the 7-step daily routine for high-performance traders are both free downloads. The 4-step method for high-performance trading is about developing the mindset and the routines to increase your confidence and your ability to execute your trading edge in a live trading environment. Constant progress. 7-step daily routine for high-performance traders is an audio program download designed to help traders bulletproof their day-to-day habits, discipline, and develop a winning mindset. Again, the link is in the description box below. They're free downloads. Let's get started. G'day traders, Stacey Burke from Stacey Burke Trading. Today we're going to continue our discussion of 3-session setups and specifically look at Friday, Free Cash Friday this week. There were several questions regarding first red day, first green day, but we'll look at instruments with a very strict criteria and then assess how those instruments set up in the timing window and the opportunities that presented for traders. So we're talking about 3-session setups on Friday. For the criteria of this video, we're going to look strictly at US dollar major pairs that break out during the day coming into our US session. The timing for currencies is 8:20 a.m. We'll repost that timing box of each instrument. No major red news on the schedule on this Friday. So as per usual, trade as a best trade candidate as it sets up. Friday is day 3 and the closing range of the week. How does price behave once it breaks out? We are going to have one of two types of opportunities. It will either be a reversal setup or a trend trade setup, or nothing at all. We'll be using the basic model for trade entry criteria, page 29 in the playbook. And this will eliminate all the confusion. Number one, it's Friday. It's the closing range of the week. And several people messaged and asked questions, but it was a first red day, but it was a first green day. And the same process applies regardless, is how does price set up on the day, and do I have a best trade candidate? A lot of people are getting confused. But it was a first red day, but it was a first green day. So we're going to review the Monday, Wednesday, Friday template. But just more importantly, the simplicity of this is, as we just reviewed, a 3-session setup. It's Friday, the closing range of the week. We're going to choose pairs that break out starting at 8:20 a.m. No major red news on the calendar, so we can just trade as per normal. Friday is day 3, the closing range of the week. How does price behave on the day? How does price behave once it breaks out, if indeed we have a market that breaks out? Targeting one of two opportunities, reversal or trend trade, or nothing at all. Basic model for trade entry criteria, page 29 in the playbook. How does price set up on the day? Do I have a best playbook trade setup candidate? People are getting caught in the minutia and they don't understand the template on the day as part of forgetting the big picture, but how does price behave on the day? Let's take a look. As mentioned, the timing window for currencies, market open New York, 8:20 a.m. There are only two types of templates that I'm looking for once they break out. It will either be a pump and dump setup or a dump and pump setup. A 3-session setup for pump and dump or dump and pump. Reviewing just the big picture, we're going to look strictly at the day itself, but remembering Monday is day 1, the opening range in a new week, a new timing cycle. On the front side, Tuesday is day 2 and typically expands the range. Wednesday is day 3, the midpoint range of the week, and it resets to day 1 on the back side of the week. Day 1, day 2, and day 3. Friday, day 3 is the closing range of the week. What type of weekly template am I in? So for the purposes of today, we're going to demonstrate how simple things can be if you just understand timings, levels, behavior of price. Every single trader has this information when the day starts. Yesterday's high of day, yesterday's low of day. And on this slide, we have Friday's closing price, which starts the week, but every day we have a closing price from the previous day. Above these levels, we have other time frame traders. Below the low day levels, we have other time frame traders. So when we have a market that breaks out, other time frame traders can be coming into the picture. And in our timing window, that can give us a lot of information if indeed we do have a trend trade or a reversal trade opportunity when our session begins. And just reminding traders that markets only do 3 things. They break out, they pull back, and they continue to trend. They break out, they fail, and they reverse. or they stay range bound between a high and a low and trade back and forth. I will be adding the PDF and this video in line with the 3-session setups that were added into the course back library in the 3-session setup area. I just want to reinforce we are not in the guessing game. There's nothing ethereal about this. It's, do I have a setup? There are only 2 types. I get this question a lot. What type of setup was that? There are only 2 types. I'll repeat this again and again and again. Pump and dump or dump and pump. There are only 2 setups. High of day, low of day, closing price. Those are yesterday's levels. Every trader has this information. The Japanese yen broke out of Thursday's high of day in the Asian session, proceeding to push higher and then putting a high in before auctioning back down and then pumping back up in the London session, taking out the high and breaking down inside. Now, when we come to our window 8:20 a.m., that's the first green box. We have a market that has already pushed up into the high, into our peak formation high once, a second time, twice, and then it's made a lower low on the inside. At 8:20, we get our engulfment inside of our 2 peak formations, inside of our peak formation high. We're working the high, and working it a third time into 8:20, we get our first engulfment. The market breaks down and makes lower lows again on the inside. The market pumps back up into our breakdown at the New York Open. Breaks down again and makes lower lows a third time before pumping back up as the third hour starts and breaking down a third time before collapsing and going parabolic back through the low of the day. So the market has started from closing price. The auction process begins from closing price, breaks out of the high of the day, puts a higher high in place before working back up into the high in the London window. 1 push, 2 push, a lower low prior to our 8:20 a.m. currency start session. Third time engulfment, breaking down, pumping up into the New York Open, breaking down, pumping up a third time and collapsing and going parabolic back through the present low of the day. Our universal entry criteria, page 29 in the playbook, aligns perfectly with our 8:20 a.m. starting time. A pump and dump template. Pump and dump template. With each position, if traders were to add an additional position, the max stop is 1 bar on each position. As this is lowered and breaks through the low, position can be brought to break even, presetting our take profit levels. Once that market goes parabolic and blows through, it takes us out of the market. That trade is over. Pump and dump template on the Japanese yen. Our next instrument that also broke out was the US Swiss franc. We've come from closing price and broke out of the high of the day before auctioning back down into the high of the day, a breakout pullback, and proceeding to auction higher in the Europe-London window, putting in a higher high of day. When we come to our 8:20 a.m. currency start, we have an auction process that pushes back up a third time before engulfing and coiling sideways into the end of the first hour. That's our third push up into our high of day level. We've broken a low and made a lower low prior to that 8 a.m. start, 8:20 a.m. start. The market then proceeds to break down and make a lower low again, similar to our Japanese yen. Coils sideways before breaking down at the New York Open a third time. Now, just comparing the two, we have a market that's broken out, pulled back, and proceeded higher. We have a coiled rectangle. So assessing in terms of comparing the two, the Japanese yen versus the Swiss franc, the Japanese yen offered traders a larger range of profit target, whereas we have a market that is auctioning back down into the breakout. Let's compare the two again. We have a market that pumped up and worked the high for the dump. We have a market that's broken out and is giving traders a short trade, but our risk-reward opportunity is a lot narrower as compared to the Japanese yen. And the purposes of demonstrating this is so that traders can discern between a better candidate. Just because something's broken out doesn't necessarily mean that it's going to be a great A++ setup. Again, the Japanese yen worked up into the high for the pump and dump template. The Swiss franc gave us the pump and dump, but our risk reward got smaller and smaller as this market continued to break down into the breakout pullback consolidation. The Canadian dollar, we had an inside day Thursday. The market pumped up in the London window and worked the high in 3 pushes prior to our 8:20 a.m. start. The inside day can offer false break reversal opportunities or trend trades depending on how price sets up. Market breaks down prior to our 8:20 a.m. start. We also have volume trapped up high. The market makes a lower low and pumps back up into the trapped volume at 8:20 and gives us an engulfment pin hammer 40 minutes into the hour. That market breaks down into closing price level before pumping back up the New York Open and collapsing parabolic through the low of the day, but also into Wednesday's closing price level, the lowest closing price level of the week. Pump and dump template, our universal entry criteria basic model for trade entries, is confirmed once our 8:20 window starts. We have an easy parabolic, stress-free, an opportunity to add an additional position or take the New York Open short into the low of day level or the lowest closing price. Pump and dump. We didn't show this, but on the Swiss franc, again, our universal entry criteria, page 29 in the playbook, is met right in our end of our first hour, our first engulfment. That's confirmed on the second and third opportunity if traders shorted this market. The euro broke out in the London session, proceeded to go through the low of day level and auction lower before making higher highs just prior to our 8:20 a.m. start. At the end of the first hour, we have our engulfment on the right shoulder. The market then makes higher highs again into the New York Open. New York Open dumps down into the breakout level. We have volume trapped down low and reverses back up to the low of day level. Pin hammer engulfment at the low of day level for an explosive parabolic reversal back to the last peak formation high made in the US session prior to closing out the day. Our universal entry criteria was met on that first entry, and it coils into the New York Open for an explosive parabolic reversal. Timings, levels, behavior of price. We have volume trapped down low. We have a peak formation, higher high on the inside, and a coil sideways on top of our peak formation as our timing window begins. Higher highs are the setup for the dump and pump. Breakout, consolidation, reversal. The dump and pump template. Breakout, consolidation, reversal. Session 1, Session 2, Session 3. For this example, I also want to point something out to traders. We have a template that's in breakout. If we just back this up, traders are getting convinced at the first red day, but we have a market that's in breakout. We've broken out of the previous week's high. Day 1, day 2, day 3, Wednesday is the reset day. It becomes our new day 1. Also put in a peak formation low before auctioning higher on Wednesday and closing as a breakout day in the long direction. Traders are looking at this as a first red day, and it is a down closing day after a breakout market. The question then is timings, levels, behavior of price. How does price set up on the day? We use the levels that are established, and I just want to demonstrate something to traders. We bring the low of day level across, and the market is trading into the peak formation low that was made on Wednesday, our reset day, day 1, heading into the closing range of the week. This is a longer time frame chart. We have a 30-minute chart. Other time frame traders below the low of day level may come in and be driving this market. Now, to demonstrate how other time frame traders can be driving this market, at the New York Open, we have an engulfment pin hammer at the low of day level. And we have volume trapped down low into the peak formation that was made on Wednesday, our day 1 reset. And even on our longer time frame, our basic model for trade entry criteria is met for a parabolic reversal from low of day back through the high of day and into the lower peak formation low of the US window. Timings, levels, behavior of price. Breakout, consolidation, reversal. The euro. For the purposes of this video, the British pound did not break out, so we will not look at that pair. The Aussie dollar broke out in the London session before reversing just prior to our US 8:20 a.m. start and making higher highs. Volume trapped down low at the low of day level. Higher highs on the inside. We get our first engulfment 45 minutes into our 8 a.m. hour. The market breaks out. New York Open dumps down into that breakout and gives traders a second opportunity to enter this market. Higher highs again, the setup for the dump and pump template, the larger dump and pump template. Our universal entry criteria is met with our first position again, timings, levels, behavior of price, and that market goes parabolic back through, we'll just scroll this across, the lower peak formation high of the US session. Again, timings, levels, behavior of price, breakout, consolidation, reversal, Aussie dollar. So in closing, I'll repeat that the process has to be very simple and reproducible. Frequently showing up on any instrument. There were several opportunities. That's just the major pairs on Friday. These are scalable in size, and they're 90-10 parabolic opportunities. Not chasing candle movement, having a methodical, simple process to rinse and repeat, breakout, pullback, consolidation, reversal, or trend trade opportunities. Two types of setups, pump and dumps and dump and pumps. Keep it simple. If it's simple, you can reproduce it. If you can reproduce that, you can reproduce your results. Simple process, day in and day out. Keep it simple, traders, and may the markets go with you.